Great to see you guys again this year. Just to give you a little bit of context and background, the three of us, as research analysts, have covered online travel probably since its earliest of days. So with that quick background, where do you guys stand on online travel stocks at the moment? Are you a buyer? Are you a seller? Favorite name in the space? Now, why don't you kick us off?
Okay, so I'll go first. So overall, in this, in the 5 or 6 stocks that I cover in the travel segment, I like Expedia the most, I would say. It's a mid-cap name. I also like Booking Holdings in the large-cap space. So those two I would throw out as my favorites.
Understood. Mark?
As a sector, I think it's just a really nice growth at a reasonable price. I think they call that GARP, World According to GARP, stock, sector, I mean. So you get decent top-line growth, high single-digit, low double-digit growth. It's not boom growth, but it's good growth. Lots of profits, and companies with a lot of cash, and they buy back stock and they pay dividends. Like, it's a great investable area to be in, has been for a decade, and there actually hasn't, it's kind of a little bit surprising, there hasn't really been a dramatic change amongst the 3 major OTAs. I know Airbnb doesn't like to be called an OTA, but there hasn't been much of a change, which says something. It must be something that says something about the moats around these businesses. So as an investor, what do you want? You want somebody who's got reasonably consistent top-line growth, lots of profits, and kind of strong competitive moats. I give you online travel.
So I'd say the one thing that's really changed over the last decade is top-line growth. We've come out of the hyper-growth phase, as you mentioned, but we're also changing how we allocate capital, and we're seeing really strong earnings growth across the board for the OTAs. So, we're trading off a little top-line growth for a little bottom-line growth, but I think overall a pretty attractive backdrop from an equity standpoint. Now, you guys also follow things outside of online travel. So within consumer-facing internet, if you will, where does travel rank? Is it at the top, the middle, or the bottom? Mark, why don't you go ahead?
It's probably in the middle, so I look at all things internet. So I look at these delivery mobility companies like Uber and Dash, and then the ad names like Meta and Google, commerce names like Amazon. I think we cover like 9 verticals within the internet space, which includes online dating, web presence, filmed entertainment, entertainment like Netflix and Spotify. So within that, travel's probably in the middle. But again, it's a little different. I mean, it's a GARP segment that's highly investable. And these are generally pretty good, safe investments. We've had a couple of interesting twists and turns, I'd say, over the last year or two. And most interesting to me, actually, is what I think is kind of an interesting turnaround at Expedia. But we'll get into that.
Yeah. Naved?
Yeah, look, I think if you look at the sector, the internet sector, I think the high growth phase is kind of behind us for the most part, except you get some one-offs here and there. So if you look at the mega caps, I think they're growing like low double digits. Travel probably is middle of the pack, growing high single digits. Let's call it normalized growth. So I think it's, to Mark's point, I think it remains pretty attractive. I think if you look at the larger players, they kind of have carved out their moats and are delivering very consistent results.
Yeah. So switching gears a little bit, AI, obviously a huge topic here at the conference and huge topic in the market as a whole. It feels to me like something has changed in terms of market sentiment, right? When we first started talking about Gen AI, I think there was a big concern in the market that it would disintermediate the OTAs. And it feels like on that pendulum of worry, we've maybe tilted back towards, okay, maybe it's an opportunity. Where do you guys think we are on that spectrum between risk and opportunity?
I have found that AI dislocation has created at least 3 great stock buying opportunities. In February of this year, I think Google shares got down to $130 of the belief that ChatGPT was going to disintermediate the company. Now, there's a lot of other issues with Google today, but if you had bought that AI dislocation risk, you would have made a lot of money. Uber was one that people thought was going to be dislocated by AI. The stock was down to $50 or something, 55, and there's a lot of debate on the stock still, but it's at 70. The third one example I have for you is Duolingo, which got taken down to 170 on its concerns that ChatGPT would obviate the need for language learning, and the stock's above 300. I love these AI dislocations. So this is a digital, I cover the internet as a digital first segment. So they certainly have an entrenched advantage in, I mean, these are usually companies run by technology people who have probably a greater appreciation than most about the power of AI and have probably been deploying it in machine learning for quite some time. So it's kind of theirs to lose, and most of them have been able to make it theirs to win. So that's what I'm really struck by. Now in travel, I think about, I'm going to really dramatically oversimplify travel. You gotta aggregate consumers, you gotta aggregate supply, and then you gotta match them together really well. And I think where AI can come is in that matching. Yeah. And I think companies like Airbnb can do a heck of a lot more to do with that matching, but I think they'll be able to do it in Expedia and Priceline. They can also use it to cut costs. So I think about AI as something that can be a tool for these companies to improve their revenue streams, improve their cost processes, their production processes, whatever it is. And I don't think it's going to obviate the need. I think 5 years from now, at the next Phocuswright, wherever that, whatever it is in 5 years, I don't think we're going to have some new AI competitor. I think all three of these companies will probably effectively deploy AI to make their businesses stronger.
Yeah, it's interesting. I think every 5 years we come in here and there's some big new threat that's going to drive the OTAs out of business. And 5 years from that point, just hasn't happened. Naved, your perspective?
So look, I think AI came out 2 years ago. Everybody thought the world's going to be different. And here we are 2 years later, and we're still trying to figure out how it really changes the travel business and other businesses. So I think there is always a risk that you can be disrupted. And I think if you have to kind of look at the risk reward, I think the larger players in the travel space are probably positioned to benefit more than anybody else, versus them losing out to maybe this new technology that can enable someone else. And the reason I say that is they sit on a lot of data which they can leverage to use to their advantage, to effectively do a better job in conversions and things like that. And then if you look at the cost side of things, they are massive businesses, and there's a lot of efficiency that can come into these businesses through the use of AI in the internal processes. So I do think that there is a threat, but I also think that there is a greater chance that the larger players end up benefiting.
Yeah. I guess I would kind of dovetail that. You mentioned the OTAs sit atop 20 years of behavioral data. They also have a couple of other things that I think make them very valuable in this process. They have millions of hotels connected, right, which is hard to do. And they have payment networks, right? So when you combine data, connected hotels and payment networks, I think it at least gets you a seat at the table, right? And we'll see where they go from there. Eric Blatchford yesterday in his presentation up here said something really interesting, that AI represents another pivot point, just like the internet did and maybe mobile did. Is it that pronounced to you guys, or is this, we're talking kind of saying 5 years from now, not much is going to change, or is this a huge pivot point and we're missing it?
So I think it can actually be bigger, but it's just maybe working out a little differently than what we have seen in the past. So if when the mobile transition happened, we could see it happen because of consumer adoption that was happening really quickly.
Yeah.
And very, as the smartphone came out and iPhone changed everything, and very quickly the consumer was fully on the smartphones, right? That happened within I want to say maybe a 5-year period. And here we are. So AI is going to revolutionize the world, but that killer app or that interaction is still being worked on. I think all the OTAs have come out with some kind of a AI user interface, but we have not seen like a dramatic change in at least the adoption. They're still in the experimenting stage. Yeah. I think once that's perfected, you might start to see then the shift happen really quickly.
And I know we must have some folks in the audience that are working on like personal agents and some form of AI trip planners. And please hit me up. I'd love to see products, but from what I've seen so far, most of them are not very good, right? And that's why adoption, I think, is going to be slow. You have to get a better user experience. There is no, as far as I've seen, no personalization yet, and no bookability yet. So I think we just haven't gotten to a spot where the products are good enough yet that they really drive that adoption. I don't want to get hung up totally on AI, though. We could probably talk for hours about it. This was supposed to be a year of sweeping regulatory change in Europe with the Digital Services Act and the Digital Markets Act. All of those went into place, and as far as I can tell, a whole lot of not much has really changed, at least in the travel category. What happened? Mark, any view on what happened there?
I don't know if I've got a really intelligent view on it, unfortunately, but I just got a gut sense that it probably helped consolidate the positions of the leading OTAs, the unintended consequences sometimes of regulation. So I don't know. I just know that looking at you tell me that, and you actually reminded me that actually came into effect, because I look at the financials of Expedia, Airbnb, and Booking, and other things have impacted them, but I can't point to anything in there that says, oh yeah, there's your regulatory impact.
Yeah. Interesting. Anything on the regulatory side?
Yeah, so I think there has been an impact, but it may not be as visible. So to Mark's point, I think the bigger players have been largely unaffected, maybe benefited on the margin. I think the players that have kind of lost out, I believe, are the smaller players, like TripAdvisor, for example, has been talking about more headwinds in Europe.
Trivago, too.
Correct. So I think that's probably the outcome of the regulation and what's happened since.
Yeah, as far as I can tell from like a deep dive on some data, it looks like, and there were some flashy headlines that went out and said, hotel direct clicks are down 30%, but it was misquoting some underlying data. I think Marai had some data out. They were at the conference here today that said direct clicks from Google Hotel ads were down 30%, but Google Hotel ads is only like 10% of a hotel's traffic, so there was maybe a low single-digit negative impact to Hotel Direct, which was what you were trying to help, not hurt. So it looks like small headwind or tailwind to OTAs, small headwind to Hotel Direct, but a whole lot of not much altogether. Booking was also hit by EU regs. They were deemed a gatekeeper, and they responded to that by cutting their hotel rate parity clauses in their hotel contracts, which means now a hotel can have a better rate on their own website than what they put on Booking. And that sounds kind of scary to me, right? That, oh shoot, we're gonna lose some market share here. But Booking, I see, is at an all-time high today. The market doesn't seem to be overly worried about this. Why, and should they be? Anything on?
So, look, I think the bigger point here is the consumer behavior.
Yep.
So the regulation might, will force Booking to have that rate parity everywhere. They were already implementing that in, I think, many of the markets, like the UK, I think Spain was one of them also, maybe Italy too. So now you might see that EU-wide. But if you look at the consumer behavior, I think it's people just tend to book whichever app they've been using the most for the last 5, 6 years, 10 years.
Yeah.
So I don't think that changes, and I don't think the rate parity actually would have a meaningful impact, if at all it does.
Yeah, I guess I get hung up on it a little bit because back in the 2012 to 2015 timeframe, we've been around doing this a while, this was a big topic. EU regulators were looking at it, a couple of places banned it, and the stocks got hit big on it. It didn't happen this time around, so any view on the parity side?
No.
Not a big deal? Yeah, I would say the other element of it is you're dealing mostly with small independent bed and breakfasts and boutiques that may have a website, it's probably not very good. They wouldn't have a mobile optimized site, so it's gonna be very hard to find those rates even if they had them. Switching gears away from the regulatory side, M&A has been a big part of the industry's history. We watched Expedia roll up all of the US OTA brands. Booking made some really savvy investments, acquiring businesses in Europe and Asia. Are we done with consolidation at this point? Is it too late in the game? We have 4 big global OTAs, and I don't know, they account for the vast preponderance. Is that too much concentration?
The fourth one is Ctrip?
Yes.
Okay.
Or Trip.com these days.
Trip.com, sorry.
Yep.
Well, one, you probably get more M&A opportunities now going forwards, for right or for wrong, with the change of administration. So that should get some investment bankers super happy. And then, yeah, you're right, there has been, although Airbnb has actually probably done, and I don't know Trip well enough, but Airbnb's done actually very little M&A over time. I can't think of a major M&A, except for Hotels Tonight, of a major M&A deal that they've done. So good for them. They've grown organically, but nothing wrong with M&A. Booking has done a phenomenal job. They probably have had one or two of the greatest M&A deals in tech land in the last 20 years. I'm exaggerating, but not by much. And Expedia just acquired a lot of, they bought cheaply. They bought assets cheaply, and their assets were cheap for a reason. And then they've spent a lot of time kind of dealing with the headache of having to integrate these companies. I'm not sure they've had a great M&A track record, but I would expect there to be more opportunities. I'm very intrigued by some of the product. I'm more interested now actually in the product development areas that are going on with some of these companies, so we should definitely talk about that. But in M&A, yeah, I think there's probably going to be more of a green light for M&A. You'll probably see more of it. I don't have any great monster deals, and I certainly hope Uber doesn't buy Expedia.
Interesting.
Because I like Uber as a stock, that's why.
We'll get back to that. Naved?
So, look, I don't see an obvious asset that's kind of up for sale, or we always see these headlines like maybe Expedia might get acquired, but I personally don't think that's very likely. I also think you might see M&A more for technology, maybe OTAs buying companies that have some AI tech that they can use and integrate, versus just simply another travel company.
So maybe coming from the outside in, so you mentioned Uber and some headlines around whether they would have an interest in travel. Even if it isn't Uber, are there other consumer-facing big platform companies that could have an interest, like an Amazon who's maybe dabbled in travel here and there in the past? Would that make sense?
No, I don't think so. I don't think you'd see Amazon do it. Google in travel.
I don't think they can, right?
Yeah, yes, you're right. Absolutely. I should start off by saying that, and maybe that's all we need to say. But I don't think Google has an interest in going further down into the funnel than they already are. They're very happy with their position. They'd rather get paid by the largest OTAs rather than having to manage that business.
Yeah, makes sense.
If you recall, I think like a year ago, no, 9 months ago, I think TripAdvisor received an interest from an unknown buyer. They never said who the buyer was.
Yeah.
Some things could happen still. Nothing's off the table, but nothing obvious also comes to my mind.
Okay. Switching gears, we're finally through the pandemic, we're through the recovery, we're through maybe a year or so of revenge travel. So it kind of feels like 2018, 19 again, probably some combo of us was up here on this stage talking about the maturation of the space. Penetration is now above 60%. Where are we on the maturation curve for online travel? Are we late in the game?
I think we are back to normalized growth. So you had COVID, you had no travel, then we had the sort of revenge travel, so to speak, and then a settling down.
Yeah.
I think we are past that now, and what you're going to see from here on is probably more normalized growth. I think online grows faster still, because you still have that 40% that's still offline, roughly, right? And then within that, the OTAs can grow faster by taking share. I think we could be in a phase where we might see high single-digit growth over an extended period.
So here we go. We got GDP growth globally is whatever, 2 to 3% year over year. Then there's leisure travel growth, and as we keep going towards the experience economy, so that's probably 4, 5, 6% growth year over year. And then these OTAs that execute really well, that sort of continue to take share, and if they're successful with new product development, they can grow high single digits and maybe low double digits. Now let's talk about the product development. So this is, this is what I'm hyper focused on, and like there's a couple of things we've already heard today. This co-supply initiative by Airbnb, I'm intrigued by it. Like, you build it, they will come, and that's sort of the part of the history of Airbnb. They also have wonderful design, but they built up the supply and they generate a lot of demand. So could co-hosting be that supply unlock? I don't know, but I'm very intrigued by it. The other one is, especially using AI to kind of bring in experiences or the connected trip. I think both Booking and Airbnb are doing this, and I think there's a lot of potential. I don't think anybody's really cracked the code on experiences, and I'm kind of surprised. And I think part of it's been a design problem, and I would think, hey, Airbnb, should be a great opportunity for you. I'm going with my family to Maui next week, and I've got an Airbnb. I've never gotten an email, a text, a letter, something in the mail from Airbnb saying, hey, I know you're in Maui next week. Did you know about these 4 or 5 different interesting experiences to do with your family? Like, really? really? Airbnb, you couldn't have thought of that? Now, I think they'll do this. I'm just surprised it's taking them so long. But I find those as interesting product development areas for those companies, particularly for Airbnb, maybe for Booking, and for Expedia too. That, to me, is going to be kind of an interesting new leg of growth.
So I'm intrigued by, speaking about product development and Airbnb, we've all done this a long time. And is it also not a little bit scary to hear Airbnb talking about expanding beyond the core without giving us any sort of bounds on how much that might cost or where margins might go while they do it? In my experience, when growth stocks talk about investment cycles, multiples compress.
Yeah, I think that's right, and I think that's, and Airbnb is going through that. It's probably going to go through that a little bit more, but there's something called ROI. You get a return on investment spend, and if it's a good area to invest in, I kind of think some of these things you're doing with trying to unlock more supply, tap more into experiences, you're going to have to spend to do that. But if you spend wisely, sure, that'll probably hit the multiple near term, but that means your growth is stronger for longer. And most growth investors like stronger for longer, so plenty of people to buy that correction, I think.
Yeah, it's been a big debate. Any view on good or bad?
Look, I think if you look at their IPO filing, they talked about the big opportunities, not just in the home stays, but also around that, right? So they talked about experiences, and then COVID happened, and there was no travels, and then I think there was some low-hanging fruit they went after.
Yeah.
And obviously, home rentals have gotten bigger, much bigger in a very short amount of time. So there's been some digestion of that. The margins have gone through the roof. I think now you're probably starting to see them, again, take that opportunity back to where they think they can, again, ramp that up in terms of the P&L benefiting from that in a pretty meaningful way. And while that happens, you're going to see this investment, which affects the margins. Now, markets, I think, will be probably okay with it if they were to tell us how much investment there is and what the ROI might look like. Markets do not like uncertainty, and I think that's where the overhang is.
Yeah. Shifting gears a little bit, usually we're up here talking about some combo of the risks the risks in the space, right? We might talk Google disintermediation or hotel direct gaining share, depending on the year, where's macro going? If you had to come up with a list of things you're worried about for 25, what would those things be?
I'd go regulation, AI disintermediation. I think these companies can win using AI, but they have to effectively deploy AI, because if they don't, that's how they'll lose opportunities, and they'll probably lose market share. Because AI is going to make these services more personalized. They're going to create better customer service experiences. And so yeah, can they effectively deploy AI? I think they can, but that'd be, I guess that'd be a second risk. Third would be macro, and we'll have another shock, I'm sure, along the way, and how well they handle that, that remains to be seen.
Right. Now that?
I'll say maybe two risks. One is a geopolitical risk, right?
Yep.
The other is, there is a risk that we might see inflation come back. However, I think the consumer doesn't have the helicopter money that was dropped 3-4 years ago, and that was kind of sloshing around. So you might see inflation go up, but the consumer not being able to spend as much or as aggressively as it did in the past. So that could result in a travel slowdown.
Mark, Naved, thank you so much for joining me. Great to see you guys again.
Thanks, everybody.